Hello everyone and welcome back to the channel. My name is Brent and in today's video we are going to be doing our M1 Finance dividend portfolio recap from the 25th to the 29th of April 2022. We're going to go ahead and hit up four different areas today. Number one, the overall performance of our M1 Finance portfolio. Number two, the weekly performance of the portfolio. What stocks were up, what stocks were down? How did our portfolio compare to the main indexes? Did we lose a bit more? Did we, do better? I always like to kind of measure our performance against the S&P and the Dow Jones, kind of in between there. Mine's mostly dividend, or actually all dividend related companies. So I like to kind of measure both the growth and the loss within the portfolio. And then number three, the activity of the week. What did we buy? Did we sell anything? What dividends came in? And then number four, what is the current portfolio dividend income? We're not going to go into the buys because I have a whole video going over. I'm going to be selling out of four positions, taking profits and kind of moving into one new position and average it into three other positions that I feel are a pretty good opportunity right now. So stay tuned for that video. Probably be released on Monday, Tuesday. So if you are not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up if you enjoy the transparency, you enjoy these videos. And let's go ahead and get into the video, right? So we've had now 2 weeks of red, and let's not make this one any different. Everything's better in threes. So jumping into number one, the overall performance of the portfolio. Overall, we are down roughly, right? At a high, we were at a roughly 77 point some percent return. Our market gain had been in the $11,000 rank, I believe 10,000, 11,000. So we have pulled back off those highs as far as market gains. But hey, our earned dividends are continuing to roll in. This portfolio over on M1 Finance has now generated $3,222.43 since it was created back on January 8th of 2018. So this portfolio is a little over 4 years, and it's now generated over $3,000, just half of a year's deposits of a Roth IRA, right? Within 4 years, we've already accumulated half a year's amount of Roth IRA contributions, which is pretty cool. Overall, we're up 61.06%, so about a little over $7,000 of market gains. Again, our earned dividends that remain 32222, lucky twos. Overall, our best performers, Apple still retaining number one at 281%. ABM Industries, I believe this was still in second place last week as well, so doing really well. AbbVie has been pulling back, but as much as it has been pulling back, it was so far extended at one point, I believe up 140%, and we did end up taking profits. I believe I sold off around $400 or so of AbbVie, just kind of shaving it because at a high, I was like, this isn't sustainable. I'll just take a little bit of profits. Doesn't have to be much. I don't have to sell out of the entire position, right? I just shave a little bit of the gains and roll it into something that's more beat up because, hey, I already know AbbVie's going to get tore up in the short term. Eventually, something's going to come around and whack it down, whack-a-mole. And something else is kind of getting beat up right now, has more opportunity to recover and go green versus continue its downtrend. Unless it's doing horrible like Netflix where it doesn't actually make any money, right? And losing customers. But Cisco, Main Street, Lockheed Martin, and so on are some of our other top dogs. Our losers of the portfolio, Clorox still remains our loser. This one's been a loser since it's been added into the portfolio, but it's definitely been doing a lot better. It has recovered off those lows of around $1,400 to about $1,627. It still remains down roughly 20 to 22%. Starbucks, well, this is a position that we're slowly building up. So regardless, I don't care that it's 22.75% down because this isn't a position where I'm not adding more capital to it. No, this is a position that I'm in the process of building up. So being down 22% just means, hey, I am building up this position. I want this position to be at $2,000 of equity invested. I have another $500 until I reach that mark, and I'm getting a discount of 22.75% of where I thought it was a good time to buy. So that's just more opportunity for me to buy. IIPR is in number 3. Stanley Black & Decker took a hard downwards turn here over the past week, down 12.33% now in the portfolio. And Colgate, it is down negative, right? But it's been doing a lot better in the recent times. So being down slightly, no biggie there. So those are our positions in the red and the worst performing in the portfolio. Now jumping into the weekly performance here. Weekly wise, we can see we are on a downtrend. We did have a bit of a pop there on Thursday, the 28th. Market got beat up. One day big on Monday, Tuesday, right? Looks like Monday, Tuesday kind of went downwards. Wednesday potentially had a little bit of an uptick. Thursday started to make some recovery. Friday, Banhammer came out and Russia made some aggressive remarks, right? Saying, hey, if the U.S. is going to be doing this, Russia may take a little bit more actions. I don't know what I can say on YouTube without getting potentially demonetized on specific videos, so we'll leave it at that as far as blanket. But that in itself turned the market from potentially being green on Friday. It was up a quarter of a percent there on Friday. At one point on Friday, the S&P 500 was up about 0.25%. I was watching it and I was deciding a couple of different positions. I was like, should I sell it? Should I buy it? I remember buying VTI at 310, and then I checked back in later. It was at 307. It lost $4, and that was down to 3%. So I watched it really quickly move about 3.25% just within a couple hours. So it was pretty crazy. Big sell-off there towards the end of the day on Friday. So overall, we are down in our portfolio 3.05%. Now, how did we do in comparison to the S&P 500? Well, the S&P 500 accelerated and actually lost 3.27%. So we did a little bit better versus there. But the Dow Jones right here did better. It outperformed us, only down 2.47%. We can see that the S&P 500 is down 13.31% year to date. The Dow Jones is down only 9.25. The NASDAQ, this thing took a whopping and has been taking a whopping recently, down 3.93% over the last 5 days. Year to date, it is down 21.16%. It's already in correction territory, actually been in correction territory. It is now considered in crashing, what's the word I'm looking for? Recession, right? 10% is a correction, 20% extended over X amount of period is considered a recessionary period. So NASDAQ here, Russell 2000, this one's already been beat up. Those small mid-cap companies, they've already been beat up for quite a long time within not only the S&P 500, but just in itself over the last few years. So the Russell has been already doing pretty badly. As of say 2021, the start, it just been kind of slowly downtrending to the downside. And that was something that we saw early on, weakness within these small mid-cap companies. But the S&P 500 was primarily being held up. 30% of the market, the S&P 500, is those tech companies, Amazon, Google, Facebook at the time, right, was holding it up. No longer Netflix, Nvidia, Adobe, many of those growth names were holding up the S&P 500, but now they're starting to crack. We have Amazon down 20-ish%, Google's down, Facebook is down 40-some%, at a time. So now the big market cap companies are starting to come down, and we're seeing that across the board within the S&P 500, the NASDAQ, and partially within the Dow Jones, but not a lot of tech within there, like the big names. But some of them are still kind of dragging it down, such as recently Apple, Disney, Lowe's, I know is coming down. So overall, I think we did okay. We kind of fell in between there, so I'm not at all worried here. I don't get worried or really emotional about my companies here. So our best positions here, Avery Dennison up 7.87 on the week. Merck up 4.85. Pfizer up 1.95 in Lowe's. Those four companies were the only green in their portfolio of red. Our worst position, Stanley Black & Decker, number 1, down 15.08%. This one took a hard left turn, said, hey, do not pass go, do not collect $200, and just kind of went to jail. This one went from green to red in a single week. ABM Industries, this one's in second place in my portfolio overall as far as performance, down roughly 9.84% within the week, not a whole lot. IIPR had been positive, I believe, but has been slowly losing percentage here week after week here in the recent times. Anything financial and REIT, real estate related, I feel like that could potentially get pretty hard hit, and you can kind of see them all in a row. REIT, financial, REIT. Those are basically all the financials and REITs that we have in the portfolio, but they're all down towards the negative-ish. So that is the weekly performance of the portfolio. That's number 2. Now, on to number 3, the activity of the week. So we had on Monday the what was the week here? Week started on the 25th. So we had our order fulfilled. Doesn't show me what was fulfilled. It just says, hey, our order was fulfilled. Oh, there it is. 25th right here. We bought Clorox, $72.37 of Clorox, and Starbucks, $72.37. We kind of split it. That all went in. We were paid by Cisco a whopping $8.68 and $2.82 by Method Electronics. So right here we kind of add them together and we get $11.50 for the week. Plus, we add our $127.66 that we add into our Roth IRA every week, regardless of what the portfolio, what the market is doing. We're always wanting to continuously dollar cost average. We have $6,000 we can contribute to a Roth IRA every single year. I want to make sure that I'm contributing up to the max to take advantage of that tax-free money after 15.5. And here we have $139.16 to invest, which is, there it is right there. So you'll have to tune in on the next video here, because right now I have a couple positions. I already wrote them out from the side. I already kind of went through what positions I want to take profits in. There's 3 or 4 positions I'm going to be taking profits in, not selling out of them 100%, but I am going to be taking profits out of 4 positions I believe are still trading near all-time highs. And with the market potentially, it broke below its support. It's now in potential dangerous territory with the rest of the S&P 500, and other individual companies can follow suit. I want to go ahead and take profits on these, kind of roll them into some positions that have already been beat up. Offers me a very nice starting yield versus where it had been in the last year. So let's jump over into number 4. What is the portfolio's current dividend income? So jumping over into our dividend tracker, we're within the M1 Finance portfolio. Now, what we want to do here is we purchased 2 companies, right? We purchased Clorox and Starbucks. So what we need to do is head over to our holdings, go down to S-Bucks. Right there, we now own 21.06 shares of Starbucks. So let's go ahead and I'm going to write this down up towards the top here. 21,16011. Capture that. Jump over to our tracker and look up Starbucks there as well. We're going from $20.23 of shares. So actually I can kind of write it here, I suppose. New shares, right? New shares 21, and we are currently at $39.65 of dividends just from one company alone. That is pretty good right there. Our cost basis is $87.18. So we're at, let's see here. I'm going to go ahead and update this right here. $87.18 was our old cost basis, and we made $39.65 from the company. So we're going to go ahead and update this right now to our new shares of 21.16011, and our new cost basis is $86.77. So $86.77. We went down a whole dollar here. We're down to $86.77, right? $86.77. That's correct. Let's go ahead and update that holding, and we can see here, bam, Starbucks went from the cost basis of $87.18 to now $86.77. Our dividend income for the year went from $39.65 to now $39.65 to now $41.47. So only about say $2, right? The dividend income only increased about $2, but we only deposited $70 into the company. So that is not bad in itself. Let's go back to Clorox here, CLX, and we're at 11.34 shares. So let's put in our new shares here. We're at 11.34, 124. Our cost basis is 185.72. So let's go ahead and jump over to the tracker here. And let's look up Clorox, CLX. Right there. So our new shares here went from 10.86. Currently, we're getting paid $50.40 from Clorox. So we were at cost basis 187. Look at the cost basis there. We were at 187.25. And we had $50.40 of annual dividends from them. So here, when we update the shares that we now own of Clorox, let's go ahead and update that. We're going to go to 1134, and our new cost basis is now 187.25. 187.25. That's not correct. What's the correct one? And 185.72, right? 185.72. We update that, and we can see Clorox went from $50.40 of annual dividends to now $52.62 of annual dividends. So that is pretty good. That's a $2.22 of increased annual income. So overall, between Starbucks and Clorox, we increased our annual income by roughly $4 and some change, by adding about $140 into the portfolio. So I believe that was pretty good. Good little pop right there. Now, this is the very end of the month, and it's very rare that the portfolio, that the week ends on a Friday and it's the full end of the week. So what we're gonna be doing here is taking a look at our 1 month performance, not only the past week, but also the 1 month, kind of like a bonus here in the video. So 1 month, right here we are, a whopping 4.89% in the month of April. That's a pretty good hit right there, 4.89. But how did we do in comparison to, say, the indexes, right? The S&P 500 over that same 1 month performance is down 10.22%. So I can clearly say that our portfolio outperformed the S&P 500. The Dow Jones is down 6.39% over the same time period here. You can see here that it was pretty high for the year, but up until April, it basically lost quite a bit there, 6.39%. The NASDAQ over the last 1 month is down 14.59%, and the Russell is down 10.85%. So my portfolio, being down roughly 5%, we'll say, is still a lot better than all of the indexes doubled almost, right? I did a little bit, I lost the least by about half of what the majority of the other indexes outside of the Dow Jones lost. And that's primarily, let's go ahead and see why. We had Merck doing really well, ABM Industries, Hormel Foods, Cisco, Clorox. We had a lot of consumer defensive here near the top, and some pharmaceuticals, so healthcare, consumer defensive here with Hormel, Clorox, Colgate, Johnson & Johnson's healthcare, along with Merck. So yeah, this is it right here. We only had a little bit of green within April, but that green really helped slow down the losses within the portfolio, where we can see here, IIPR lost a whopping 30.6% in the month. That's a good chunk right there. Down $665 right there alone. Stanley Black & Decker, that was just this last week alone, lost a good chunk. Starbucks, this has been on a downtrend, but that's awesome. Or, it's fine. JP Morgan, this one is down near flat now from when I initially purchased it, which is just opportunity right there alone. Apple down 11.91, and so on. So that is basically the 1 month, right? I could go over the dividends that we received in the month. It's really hard to let you guys ask, like, hey, that's a really good idea. Well, I think we'll do that anyways. We don't have very many. We can start here at April at UGI and kind of add them up together, and it won't take too much time. So we can start right here at UGI and see how much dividends we actually received. I could have made this like into its own video, right? The 1 month recap of the month, or for the month of April, but since we're already doing one on the week, and there's only a little bit more data to include. I'm just going to go ahead and include it here. So definitely drop me a comment if you do appreciate that. And if you have other questions, also drop me a comment down there. So 7, 8 and plus 10, 30 plus 8, 68, if I can punch that in. And the last one there, 282. Bam! For the month of April here in 2022, we made $111.24 in dividends. That's a pretty good chunk right there. That's $111 that I was able to reinvest into the portfolio, into the market during this dip to buy me more shares of my favorite individual companies. That will increase their dividend. That will continue to pay out a dividend and just buy back more shares, right? So I think that's really cool. I'm really happy so far with the performance of this portfolio, blah, 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 blah. Even though, you know, the market's red, but so is my portfolio. Or I guess it's backwards, right? My portfolio is red, but so is the rest of the market. But my portfolio isn't falling as fast as the market, meaning that when the recovery does happen, my portfolio may not recover as fast or as fast as the market, just because it didn't take the tumble that the rest of the market did. So some things to kind of keep in mind. So that is going to be it for this video officially. If you guys enjoyed the transparency of the video, definitely give me a thumbs up button below. Drop me a comment saying how have you guys been doing in your portfolio? What would you like to kind of see changed in the future as far as information being provided and such? But otherwise, I appreciate all of you hanging out with me, checking out the channel, checking out the video, and I will see you guys in the next video. Bye-bye.